Welcome, guys, to the Market Mechanic Beginner Crash Course, the blueprint to success. My name is Rodney Davis, and I just wanted to make this free, quick, really simple, really basic first half of the course for you guys. Those of you that are super fresh and like kind of fresh, you get a little bit. I'm not gonna do any like really basic stuff like what Forex is or any of that. That's all over the internet. This is just going to be a little more mentality and planning, and then we'll go to a chart. Okay, I'll teach you how to use TradingView and then how to read it. Really all you really need. Okay, so I'm gonna hop straight into it. Before I get into that though, if you're new to the channel, I drop Forex content all over, free bombs, free nuggets all the time. Feel free to subscribe, like, share, comment, and join my Telegram. Join my Telegram in the description. Well, I almost forgot what that was. Join it in the description. Keep up with me, all the updates. I ask questions in there. I share a lot of information, maybe some trade ideas, things, so on and so forth. So without further ado, we'll get into this real quick here. Now, questions that you should ask yourself before getting started. Okay, what are you even here for? Okay, I asked this question because a lot of people, you hear a lot, just want to come in here and make a lot of money. And the sad part about it is it's not like that. It can happen. I've seen some crazy things in my day when people start, but I want to keep it realistic, right? I don't want to blow it out of proportion, because even when you start out and you make a lot of money, are you going to be able to maintain that? That's a serious question. Okay, so definitely ask yourself that. It's gonna go hand in hand with this next part. Do you want to trade or do you want to make money? Right, trading is an art. For me personally, a lover of the game, a lover of the art. I love the process. So it's a big difference between coming in here and wanting a lot of money and somebody that genuinely enjoys sitting down, looking at the chart and really depicting what is going on in front of me, right? That's a big thing for me. So I make those prevalent first out. That's, you got to understand that, right? And then how much time are you able to put in, right? It's huge. Now, I'm not saying you got to be here all day. Like, that's the whole point of trading. We don't want to be tied up to a job or something all day. But if you can do about 6 to 8 hours a week looking at the charts, training your eyes, you should be perfectly fine. You should be perfectly fine. A maximum of 10 hours a week. A maximum of 10 hours. That's 2 hours per day. Or if on the weekends you got a little extra time, you can back test in, stuff like that. So that's a huge question you should ask yourself as well, because you want to make sure this is feasible for you. Now, do you have the funds to invest? Right, I know you hear all the, you can start with $50, and you can. I don't want to discourage anybody, but I recommend you have at least $1,000. Now, I'm not talking your last $1,000 either. I'm talking $1,000 that you're really not too worried about. It's not gonna break you. Okay, it's not gonna break you. I recommend $1,000, 500 to 1,000. I'll say that 500 to 1,000. I recommend that. And then obviously with risk management, right, which I have a very in-depth video on that. I'll explain that later, and I'll probably make another one on trade management too. But funds, have a little bit of cushion, and make sure it's not going to break you. Make sure it's something you can afford to lose, right? Because this trading involves risk. And when you're getting acquainted, mistakes happen, things happen. You're going to have those minutes of greed. Once you get what's going on, it's going to happen. I don't care who you are. Nobody has a flawless victory when you start trading, okay? And most importantly, what do you think this can do for you? I know this goes kind of in hand of in the beginning question, but by now you should know, what do you think this can do for you? If you're like myself, right? You don't feel like you can be tied up for a job forever. You don't feel like really hone in on what this can really do for you. And I emphasize this because one of my mentors that have told me, you got to begin with the end in mind. If you see something that this can do for you, You've got to latch onto that, and that's what's going to drive the doubt out towards your goal. And when it comes to this, okay, that's what you're going to want to focus on day in, day out. Okay, boom. I know it, by the time, once I get this going, I can do X, Y, and Z. I can invest in this, this, and this. I can provide for my family this way, and this way. Have something attached to it, not just I want to make money, right? And that can be your goal, but it's got to have some depth, some meaning that'll drive you, okay? Now, expectations when it comes into trading, okay? I want to just clear these things out. Trading does not take all day, like I mentioned in the previous slide. Once you know what's going on, you're not here long at all. Me personally, after I've been sitting there for about an hour, if there's nothing if I don't like to see, I'll probably more than likely, I might stick around. I might pop in a little bit. But if I've hit my goal in the time that I've liked, or if I've gotten in a trade that I see has potential that I can hold or something like that, I'm not going to look anymore after that. Like I'm, more than likely an hour and a half, maybe, if that. Okay. Trading is a marathon. It's not a race. Okay, you got to enjoy the process. Like I said, that's why I asked, do you want to trade or make money? Because in that beginning process, you're going to just be learning how to win. You need to learn how to duplicate at that point. I don't care if you're making $1, $5, because in the risk management video, I talk about the biggest secret. You're going to realize what you do to make $1 is what you do to make $10, $100. Let's go, it goes on and on. Right? Get ready to be humbled, okay? Because this market does not care about you. It doesn't care whatsoever about how you're thinking, how you're feeling, none of that. It doesn't care. So be prepared, right? Be prepared. But you can't, I don't want that to be scaring you either. I don't want that to scare you. It's not scary, but understand that this thing, it doesn't really, it's like, oh, I didn't mean to hit your stop loss, I'm sorry. No, it's not gonna be like, oh, here's your money. No, it's not gonna do that. Okay, this thing really is just the robots, and it's artificial intelligence. Okay. And then trading takes great patience. Are you patient? That's probably the biggest thing. As a matter of fact, trading is really, that's 90% of trading is sitting there and waiting. The other 10 is just hitting buy or hitting sell. That's like, 5% buy, 5% sell. So that's going to be the biggest thing for you, is developing that patience. Trading, trading really is honestly deeper than money. You learn a lot about yourself. One of my mentors, told, this is one of his quotes, whether you're seeing red or blue, it's a reflection of you, right? And obviously the red and blue references to, red is obviously losing trades, blue is obviously winning trades. And so what you're seeing in that trading history, when you go to trade history and you see if you're winning or losing, remember, that's a reflection of you, right? It's a reflection of you. It's going to tell you a lot. If you're losing a lot, are you really, do you understand what's really going on? Or am I exiting too early? Like, am I taking unnecessary loss? Like, what am I doing? This self-reflection is huge, because you'll never grow without that. Okay, so that's a big thing to understand. Okay, now mentality, right? Treat trading like a video game. Okay, pretty sure all of you know exactly what this video game is, in the background, right? Super Mario, right? Now, this is actually what changed my trading forever. This one segment is to change my trading forever, because prior to this TED Talk I watched, right, called the Super Mario Effect, and I will link that in the description if you want to take a look at the more in depth, what actually he did and how it correlates to tricking yourself to learning more. I'm really going to be brief here, but think about if you played this game or any other game, right? Think about when you were playing this and you, let's say you hit the monster or whatever, or you fell in the hole, right? How did you feel? Did you dwell on, oh man, I fell in that, or oh man, I hit the monster? No, when you play these kind of games, it kind of takes that pressure off, and you're more so focused on hitting start again and hopping back in the game and going again and again and again. Because you're not so worried about the L. You're gonna come back in the game, right? Because the hole is there now, right? Okay, I know the monster's there right there. Like, right when I get to this point, I know now, right? The experience is teaching you, it's literally molding you. And next thing you know, you're at the end, you're rescuing the princess, you beat the game, and none of those failures defined you. And that's the point of trading. Trading is all about having the ability to just keep shooting. And eventually, you're going to become an expert, right? That's how you become an expert. I can sit here and tell you everything about trading, but if you can't handle that, which you can, it just takes time. You can't handle that, you're gonna have a struggle. It's gonna be hard to keep going if every single time you lose, it just feels like it's just, oh man, I mean, this is the worst day of my life. Like, you know what I mean? Like, you can't feel like that, okay? So just treat it like this. And I tell you, this would change my trading forever. Now, what type of trader am I looking to be? Now, the first one here, this is just basically, it's going to be really brief. The types of traders you can be, and I explain them in this video. I mean, in this slide here. So position trader, right? I got in parentheses, holds on for dear life, because, and I don't expect anybody new to do this. I'm just exposing you guys to what you can do, right? And position trading is basically holding for, months, weeks on end, not closing, just holding a position for a long time. That's a position trade. Or a mega trade, if you will. That's one style of trading where you don't really look at the charts after you take one trade, for a whole month or week. So, like I said, I don't expect anybody to have that strength yet. If you do, I mean, more power to you. But that is a style that you can have, right? And that swing trader, this is more of me. So, I swing trade, right, where you can hold multiple trades. Can hold for a couple days to a week. You can hold trade, swing trade. Let's say you took a trade Sunday evening and it happened to pan out over Monday. You took your partials and you let it ride, stuff like that. That's one way of doing it well. And I recommend that if you work a job still, all of that helps you a lot. Because it's not easy working a 9 to 5 and wanting to learn trading. If we're being real, ladies and gentlemen, trading isn't meant for us. It's not meant for the public. It's not designed. It's a system designed to fail. Okay, so think about it. When is the stock market open? 8:30, 9 o'clock. When is everybody going to work? In that morning range, right? Or if they're not heading to work, they're already at it, right? When does it close? Well, I'm thinking of it in stock market terms, right? That's why the Forex market does give you a little more leeway there, but stock market closes at 5. When does everybody get off work? 5 o'clock. They have no way of doing anything in that morning range. You see what I mean? It's kind of crazy, but it's not designed for us. So swinging can be feasible for those that work. Intraday, right? Now this is for you kind of got to be able to be up around those volatile times for this to work out. Not really. Like, sometimes you can take a trade, hold it for a day, couple hours, make what you need, etc. That's more intraday. You're trading within the day, right? Self-explanatory. And there's certain times and things like that I can go into later. Scalper, right? Now this is a one I don't recommend starting out because it's high risk, meaning you're obviously putting a lot more on the table, but you're probably in a trade for 10 to 30 minutes at tops. I personally am not a scalper whatsoever. I have, it's not that hard, but it's high risk, you know, and I wouldn't recommend it starting out until you're emotionally, you know, detached from money, you know, because you can lose just as good as you win scalping. So scalping is high risk, can be high reward. I just don't recommend that starting out. So, but these are the 4 types. You know, you can go online and look more in depth with some of those. Like I said, I'm not going to go super in depth with a lot of this free information that's everywhere. I mean, it's everywhere. I mean, I'm not really doing anything new. I'm just compacting. I'm more so, you know, compressing and compacting all the what you really truly need out of everything, right? So this is a quote of mine that, well, not mine, obviously, one of my favorites, by Benjamin Franklin. And, you know, obviously self-explanatory. The person who fails to plan plans to fail, right? Basically meaning, without a plan, you've already derived a plan for failure, right? You're going to fail without a plan, right? So anytime that you take a trade, take a position, do anything in life without planning, you know, you're destined for failure. It's just, now obviously that's not all the case. Sometimes people are good on the fly, whatever, but why do that's like high risky. You know, let's say you got ready for, you know, you had a presentation, you knew it was coming up, and, you know, you didn't prepare anything. Like, you know, you're gonna fail. You know, like, you're gonna fail trying to do something on the fly. So it makes sense to have a plan and trade your plan, right? That's all you can do. Okay. So this is a quick, brief beginner plan for everybody, right? This is what I recommend. You can tweak it however you want. Remember, this is all creativity. This is your thing. This is just something I recommend. So first, find 4 markets to participate in, right? For example, I personally recommend 2 Forex pairs, 1 commodity, and 1 indice, right? Which would be like a SPX or a NAS 100, something like that. Now, you can mix this around, but keep the 2 Forex pairs. You know, you can go 2 Forex pairs and 2 commodities. You know, you can go 1 commodity, 1 crypto. But all around, stay on 4 markets and learn them well. Because I promise you, for me, like, there's a lot of things out there that you can trade. But if you can really learn 4 different things, you can learn 4 markets well, you can make so much money with just 4. I know people that only trade 1 thing. So, you know, think of them as businesses. Let's say that. Let's treat 4 pairs like businesses. And what I mean by that is, like, you know, you can't obviously operate 10 businesses. I mean, you probably can. I don't know what your situation is. This is all hypothetical though. So you can't operate tons of businesses. Find some solid businesses that work for you, that you gel with, that you, you know, like a lot, and you just focus on those and grow those instead of hopping everywhere, looking at everything, when all you need is right in front of you with your 4 easy pairs that you've learned. You know what I mean? So keep that in mind. You know, I recommend writing this part of the section down. You know, I'm going to focus on 2 pairs, commodities, and indice, right? Second, figure out what times you want to trade. Here's an example. And I didn't put this in there, but I can really explain. I explained this on the chart. But is an example of time zones, right? Let's say you're in a specific standard time. A good time for you to trade is around 11 p.m. Pacific Standard Time, which is an hour prior to London session. All right, I like that. If I was in the West Coast, that's what I would be doing. I would be looking at trades. I'd sit down and chart around 10, 11 p.m. and I'd see what I could find prior to London session. London session is basically, if it's not covered in any other videos that I've done or in the videos earlier in this playlist, London session is just like, think about it, right? Around 11 p.m., 12 p.m., we're starting to be asleep, right? Who's up? London, you know, foreign countries over there. So that's going to be the volatile times that you can take advantage of late at night. What about if you're in the Eastern Standard Time? 7 a.m., 11 a.m. is the best time for you to trade, solely because I had a typo, because you can get New York session overlapping with London session. So this is a very volatile time. It's hard when you work 9 to 5, but I promise I was in the same boat, right? I didn't just magically poof and understand. Magically poof and just start trading, during work or anything like that. I've been in this situation, right? You've got to want it bad, right? That means waking up early. Get up early. Preset your trades at night, right? But that's 7 to 11 a.m. If you got a setup, and it happens to land around that time, trust it. Let it ride. You've got your money managed. Everything looks good. And it's good for you too. That's one thing I appreciate. I used to hate the fact that I couldn't sit there and watch my trades, but it actually helped a lot because I wasn't inclined to close. I wasn't inclined to panic. I just let my money work for me. And in tune, obviously eventually I got to the point where I changed jobs to where I had that morning range so I can monitor, and it ultimately worked my way up to where I don't work at all. Okay, so that's how you can do this. But like I said, it's a marathon, not a race, right? You got to figure out what works for you, and this is just examples on time. Weekly percentage goal. I'm not going to go too in depth with this. Watch the biggest secret video I'm going to put in there, but I recommend 5 to 10% a week. Train your mind to do less. Okay, train your mind to do less, because eventually once you've done that for a little while, and I go in depth in this video about this. Once you've done that for a little while, 5 to 10% is going to take care of you for the week. Next thing you know, you've quit your job, right? Or you've invested in something else that then will help you quit your job, whatever it is your goal is. And then I accidentally clicked. But the fourth, how many trades you want to take a week? Now, I recommend 1 to 4 solid setups a week. I personally recommend. I would not overtrade. That's 4 solid days. Or if you take 2 trades in one, okay, boom, it's Monday. I took 2 trades. It was successful. Do I really need to keep trading? Think about how many times you're hitting buy and sell, because this involves risk. Anytime you hit buy and sell, your account, your money, your portfolio is at risk. So please be mindful of how many times, you don't want to overtrade. Imagine making all your money, and then you happen to see something crazy on Friday and lose it all, or something like that. Hopefully, you're following your risk management to where you don't lose all your profit. That wouldn't make sense. But don't even worry about that at all. If you've hit your goal, please stay on track with that. Please stay on track with that. And then lastly, find a mentor, someone who has what you want, right? And by all means, you can do this yourself. You can do it yourself. But the thing about it is if I can cut my learning curve, why not? If I've got somebody that's been in these shoes, emotionally, mentally, physically, why not? Why do people go out and get physical trainers? Because their form, they just can't get the form right. They need somebody there to guide and help that. Imagine doing your form 6+ months wrong. I can, as a mentor, as an outside view, think of someone as a mentor as like a lifeguard, right? And you're out in the ocean, right, or pool, whatever, and there something is around you, like a shark or something. I can warn you, I can help you and guide you. Okay, so just keep that in mind. I do offer some stuff that I will be launching soon. Like I said, the Telegram has all the information on that. And I'll be dropping a video pretty soon on what it is that Market Mechanics has coming up. So that's the beginning part of this. I hope this was useful, this part of it. Now we're going to go to a chart, and I'm going to break this down and show you all that you need to know first starting out, how to read price. Okay, so go ahead and boom. So here we are on a chart. For those of you that are not familiar, this is TradingView. This is the platform where you would go to on your your laptop or iPad or whatever, and you would then start looking at the market and building your bias. right? Start building your bias. So for those of you that are super fresh, super fresh, I'm going to just break down the first thing you do when you come to look at a chart. All right, if you haven't watched the videos earlier in this playlist, like I said, I wasn't going to make any videos about beginner stuff because it's everywhere. So I've got 2 videos from other people in the playlist that shows you, candlesticks, what it means when they're moving around, things like that. Right now, this is going to get into putting all that together and reading price. Okay, so let's step to the side here. And like the video mentions, we talk about bullish and bearish environment. So you want to figure out what environment you are currently in. You want to know what environment you're currently in. Okay, so and what can give you clues as to what environment we're in. Right, a bullish environment would be higher highs and higher lows. Okay. Now, what makes this? Let's just break this down real quick. Right, we have a high point, we're a low point, high point. We come down, make a low point, but this low point is higher than the previous low point, thus giving the ability to anticipate higher prices, right? And this is where we do then come up and make a higher high, right? And then this is a game of anticipation. Okay, so at some point things can only go on for so long. Eventually the market then pulls back, right? But this is where we anticipate that higher low, right? Until price proves it otherwise to me, I will only be buying. I will only be looking to buy this market. This is a buying environment. This is a bullish environment, right? And so I'm going to continuously do this. All right, let me make this a little smaller. I'm going to continuously do this, continuously buying until price proves otherwise. Now, how do I know price is telling me, hey, this stop buying? It's time. It might be changing. Okay. We make this high point. Now, if we were to come below this low, right? Think about it. What could that possibly be? A lower low, because this low is now lower than the previous low. And thus, once that happens, right, you can then anticipate this high to maintain. See, it's like a combo, right? It has to do it has to do both, right? The low has to be crushed and the high has to maintain. Right, meaning, obviously we see some failure in here and thus brings price lower, right? And this is that confirmation that we can start getting these lower prices, right? So these would be your points of focus, right? When you're starting out, you want to just trade with the trend. There's, once you get more experience out of it, there's ample opportunity where you're selling into the buy, or buying up, holding the buy and the sell. You can do a lot of different things once this makes sense, right? But that is that's structure. Right now, I have a more in-depth video on structure. It's my how to trade gold video, where I speak on understanding each time frame, right? So in the video prior, it talks about all the time frame stuff as well. And so I want to show something real quick. Now, here's some things you need to be aware of when you're trading structure, right? Remember, I said this was a bullish environment, right? This is what we're looking at. Now you have to be aware. You have to be aware of what I like to call counter trend, right? Or BS in between. That's what I like to call it. Basically, where we'd have this point where we come in and make a low, but then this high maintains, and so this is where a lot of people can get lost, right? Oh, the high maintains, so we can get lower prices. Not necessarily, right? This is just the beginning of a trend within a trend. Okay, it's a trend within a trend. So how do we deal with this, right? It's this simple. Long as this low is intact, it does not get violated whatsoever. You can be in a scenario where you get prices, it shrinks and strengths, and then ultimately we get to this level and we find ourselves higher, right? Coming above this level, all these levels, right? Continuing that bullish environment. Okay, that is the beginning of a counter trend. And just to show you upside down as well, because I don't want you to be one-sided, if you will, looking at, you know, bullish stuff or whatever the case may be, right? If you've got something like this, where price is coming down, right? This high maintains, come in, right? It's the same thing. Long as this high is intact, we can anticipate us to continue that bearish momentum, that bearish environment. You got to understand that low is super powerful. Structure is king. I promise. I promise you, structure is seriously king. So let's go look at a real example of how we can develop and understand what kind of environment that we truly are in. Okay. All right. So I did a little bit of replay tool just to go back a little bit, because I wanna go over the previous, you know, just start reading left to right, and give you guys an idea of how, you know, just to get a flow of this. Okay, I know the picture I drew prior, it's never going to look like that, so it's always good to look at this as well. Okay, so, you know, like I said, we read left to right. You don't want to think too hard, right? You want to make it as simple as possible. So I'll just start as I'm looking at this, right? As you guys can see, the points here, noting that we are in a bearish environment, right? We're making lower lows and lower highs. So there's no really any reason for me to guess and say, oh, it might go up now. It might. No, we're going to side with selling until it tells us to do otherwise. Okay. So what I'm looking at here, and I'll just start right here, for example, it's just because I want to hurry up and get relevant. Right. But I'll note this high, right? This lower high, right? We come down, we trade down, we make a lower low. What makes these low is these points are, this point is lower than the previous lows, right? So lower low, right? And I want to nip some in the bud really quickly. Don't let this wick misconstrue you, right? Remember in the other videos, wicks are shadows, right? If I turn this off, it's not there. Structure is the bodies of the candles. Okay, I want you to really remember that. That's super important. Right, but don't let the wick misconstrue you. Okay, I'm gonna continue reading. Right, lower low, lower high, right, lower low, right, and then in this scenario we do come up and make a higher high, so thus giving us the possibility, right, to then anticipate a higher low, right, up into a higher high, right? But remember what I said, don't get trapped in the counter trend, right? The overall sentiment is bearish. The overall sentiment is lower prices. Thus why we make this higher high, but this is really just a lower high, right? See, this this particular area here was what I was speaking on in the BS in between, right? It's distracting, right? But really understand and keep going with the overall sentiment, the overall bias, right? So continuing down, just want to read this guy with you guys. Lower high, lower low, right? We come down, we make a lower low. We then come up, make a higher, we come up and we make a lower high, right? But what happens here, right? We come up and we make a higher high. And so it starts again. It's just a repetitive process of understanding the flow, understanding the environment that we're in. And so I want to ask you guys, if you can pause and ask yourself, like, it would be great if you did that. Pause and ask yourself, do you think that just because we made this higher high that we can potentially get shorting opportunity up here, or do you think we could go higher, right? If you thought about it and you answered correctly, and to be honest, there is no correct answer. We don't know what we don't know, right? And what I mean by that is this by all means could continue higher. This by all means could continue higher, going higher, and go to the moon. Like has all the reasons it could do that, right? But until proven otherwise, I will be siding with everything that the price gives me, right? So until this area fails, I'm a seller long term, right? We're just buying the BS in between, right? If you want to do that, right? And so you come down, you anticipate that higher low, we come up, we make that higher high, but that higher high is still a lower high. As you can see, the maintenance, right? We maintained once we got to that point, right? We maintained once we got to that point. And then ultimately you can anticipate that extremely bearish momentum, right? And as you can see, price just drives past. And so throughout all of this, you know, that's where you're going to be looking for shorting opportunity. Now, how do you know where to do that at? You know, I see this, I see all of that. Well, here's the beautiful thing about trading. Okay, trading is extremely fractal in so many ways, right? It's a pattern within a pattern within a pattern that's within a pattern, right? So what does that mean? Okay, right now, remember, like I said, we're on a daily time frame. Every candlestick represents an entire day. Okay, so more than likely you're not going to be taking entries on a daily time frame. So what you would want to do is drop down to like a 4-hour, 1-hour range, which is going to be the majority of the time the most elite time to get into the trade, get into trades. And really, ultimately, all you're doing is trying to find the same thing that you see on the higher time frame. So your daily is going to be like your daily is your trump. Daily is your king. Okay, that's going to be, obviously the weekly and the monthly is stronger, but they take a little longer, right? If we're looking week to week, your daily is going to be your sweet spot in terms of direction. Okay, now when it comes to dropping the lower time frame, it's the same thing, just more data. Okay, every candlestick has its own structure within, so you got to go down and learn to read it within again, right? We come down, right? Lower low, lower high, lower low, right? And so in this lower low, what are we anticipating? Lower high, right? And so this is your region where you would be looking to find shorting opportunity. Nothing more, nothing less, right? Once it's back in alignment, well, honestly, it never changed, right? You wouldn't let this misconstrued you, right? Just it flying up like this. This lower high low, it signifies that we can get a lower high, right? And so that's you reading price. That's just taking what price gives you. And that's really all you generally need to understand first starting out, right? Obviously, there's more technicals to it. You need to understand, you know, what's driving the market, all of those good things, right? All of those things are super important when it comes to this. But just a general step in the door, this is where you want to start at. Your bread and butter, learning how to read. That's it. Right, for me, trading is really a language. You know, you're just, obviously you're learning what your pips is, what your, you know, candlesticks, wicks. You're learning the terms and then learning to put it all together, right? It's really all it is for me. All right, so the next thing, and this will be really to end out what we're discussing here, right? We've gone over the expectations, the emotion, the mentality going into it. We've gone over how to just learn how to just beginner reading of price. Very simple, very straightforward. And now I want to just go over something with you guys, just a little cheat sheet. And this is a free thing you can find all over the internet. You know, that's why I'm just going to put this out here. This isn't something I want to charge for. But this is the general 4 phases that you'll encounter in the market. This is the market's overall cycle. Okay, this is the cycle of what you're gonna see, you know, over and over and over again on the charts. Okay, it can only be in these 4 motions here. Okay, now it's more so like, as you can see in the, let me get an annotation tool. You can see it's more so a cause and effect situation, right? For those of you that are aware of how I trade, I don't trade in such a way like your retail would do so, like the normal way of, the trend lines and all that. I more so trade alongside, right, how bigger players would play. If you think about it, there's obviously me and you, where we have our X amount of capital, but then there's players that have the huge amount of capital that have the ability to then trade within the market. Okay, that's the name of the game, right? It's a capital game. The more capital, the better your opportunities are, obviously, right? And so instead of going against bigger players, right, we play alongside, right? And this is the 4 phases of how you can see the market moving, right? So I'm just gonna go through this cheat sheet with you guys, and then I'm gonna show you a real example I've already marked up, just to show you this is feasible, once you train your eyes. Okay, like I said, cause and effect. All right, cause and effect. I don't like the way these look. Ew. Let me go back to this and let me take that off. Right, but cause and effect, right? Your accumulation, right? Where self-explanatory, accumulate or gathering, right, of money, gathering of orders, gathering. This is where smart money likes to buy in the market. Think about it. When you go in a store, you're looking for what? The best price, right? Why would they be looking to buy in the midst of all this? Right? They want the absolute best price, right? Simple, right? And so this is a pretty much more so a psychological level, right? Where price can be then accumulate. We may have been selling off for quite some time, and so the market's got to regather itself, if you will. Okay. So during that accumulation phase, that cause, right, you get these scenarios that you can train your eyes to then see time and time again, right? And then ultimately this cause, this accumulation, is the effect, right, during that what's called the markup, right? The markup is where obviously price begins to show where it wants to go, right? And you get it, you can get a large amount of movement from the markup, right? If you can identify that accumulation. Now, this isn't giving you anything specific or anything like that. This is just showing you a phase, and I think this is super important to understand. Once you learn how to read price, then you can start looking for, you have some pattern recognition. Now, I'm not talking pattern recognition in terms of top, double bottoms, double tops, and flags. That's not what we do here, okay? We focus on bigger players. We don't play like everybody else, right? It's like boxing, like you're going to study your opponent. Simple. Very simple. So as that markup draws to a close, because things can only go on for so long, right? Then you run into what's called a distribution phase, or that sell-off phase, where we come to another cause, right? Showing what you'll generally see, right, during that distribution phase, right? You're starting to see signs and reasons, and right, that builds the confidence, right, to then be prepared for that next effect, which is the markdown, right? Again, nothing specific on how to enter, but practice this, right? Study this kind of stuff, right? And go on TradingView and just read. Don't worry about money right now. Don't worry about any of that stuff right now. Let's train our eyes, okay? And so I wanted this to be in the video to show you the phases that you really need to understand. Okay, you gotta understand these phases and the importance of knowing what phase you're in. Now, when it comes to looking at a chart, I'm not necessarily looking at what we're in per se, currently. I'm more so focused on what phase did we just cleanly left, like that I can visibly see and that's obvious to me. What did we just leave? And so that can help me to move forward. Okay. So what I'm going to do now is I'm going to pause real quick, go to a chart that I've marked up and show you guys all 4 motions in one full screenshot, right? So, all right. So here we go with a real market example of those phases that I spoke on and obviously earlier, right? So I want something to just be super clear from the get-go. It is never, ever, ever going to be picture perfect. If it is, by all means, awesome, great. But don't be so focused on the looks of it, if you will. It's more so about understanding the logic, okay? That's what it's really all boils down to, is understand the logic. Why would smart players, why would big players, people with a lot of money, why would they be interested in buying and or selling this market? All right, that's the main focus. All right, but now, not diving too technical, too deep or anything, we're just going to acknowledge the price action, right? Notice the accumulation, the calls that I outlined, right? Very similar to the screenshot shown where we're moving quite sideways, gathering the orders up, right? And thus this cause then the effect, right? The markup where we then move price. This is the result of the accumulation, right? And then remember, things can only go on for so long, and so that's when we then enter into the distribution or the calls. It's, you know, back to the new calls, and then the market releases, right, in that markdown, which is that 4th and final effect. Okay, so this is just to train your eyes, really get you a visual, right? You know, as long as you you can be, understand the different phases and, have some little creativity in there, not in the way of, making things up, but like I said, that'll never be picture perfect. So you've got to learn to apply the creativity with the logic. Does it make sense, right? And, over time, you'll see as you watch price more, you study more, it'll make more sense, right? Nothing is hard. It's just new, right? And in reading this is really, once it makes sense, it's just like any other skill. I don't see it as anything different than, being like a plumber or a mechanic, anything like that. Not degrading those or saying they're similar in the sense of skills, right? But that's generally, what I wanted to hone in and lock in for you guys today. So I really, really appreciate those that stay to the end. I hope this was valuable, especially for people that are fresh. And, I know it's a lot of sources out here, but, and I'm not out here proclaiming to be the absolute best, but, if this was valuable, if I've helped you make this make sense, right? Drop a like, comment, subscribe, share to somebody that's interested in trading Forex. And then, lastly, market mechanics, as I've been showing, slowly building the brand up. The mentorship should be open extremely, extremely soon. I'm super excited about this, opening this up to more people. I work with some people now, but now I'm going to be opening up to more people that want to, hey, you want to come learn from me? You feel like, mentorship for me would be probably beneficial, especially if you're fresh or you've been trading for a little bit and you're just not seeing the results. Like I said in the PowerPoint, find a mentor, and I'm willing to do that. So by all means, you don't have to, doesn't matter, right? But I am opening my doors for that. So if you're interested in that, join the Telegram. That is where all the announcements are going down at. That's where everything is going down. I'm going to be updating people there, social media, all of that. All the links will be in the description. I appreciate each and every one of you guys. Hope you have a great day. And this is Rodney Hits TP signing out. Peace.